Welcome to this week's Kline May Corner.
Hi, thanks for joining us for the Kline May Corner. Today we're going to talk a little bit about home loans. How does the lending industry work, and are all lenders the same? And really the answer is no, they're not. There are lots of different kind of lenders, from a local bank that's loaning its own money and then maybe servicing that loan where the buyer is going to make payments to that bank for 30 years, to, on the other end of the spectrum, a mortgage broker who just shops the market and charges a fee for their services. But a couple things to think about in the whole lending process is really how it works. Typically, a bank will loan their money, or a lending institution will loan their money, and then they'll sell that loan on what's called the secondary market. Most folks have heard of Fannie Mae, Freddie Mac. They'll buy those loans, turn packages of those into financial instruments, and sell those financial instruments to investors. That money then makes its way back to the banks so they can make more loans to the public. The return that's demanded by those investors on the back end is really what determines interest rates and how high or low they're going to be. They're very low right now. Even though the experts say they're going to climb slowly over the next couple of years, we don't expect any big jumps. The other big thing to think about when you're thinking about lenders is the servicing side of it, and a local lender versus an online lender. Online lenders often advertise very low interest rates and can generate some business that way, but it's important to realize that service is a big part of that process, and having a local lender to have conversations with and work through that process is very, very important and can be a huge advantage to a home buyer.
Thanks for watching this week's Kline May Corner.